Welcome to the show where we look at how business shapes our world. I'm Stephen Carroll. Coming up, market turmoil and trade trouble. What does Donald Trump in the White House mean for the global economy? A seismic shock for Indian consumers as the government orders 84% of banknotes be replaced. We're looking at the long-term effects. Plus, tempting tourists back to Tunisia with help from the country's winemakers. First up, though, as the dust settles on Donald Trump's victory in the American presidential election, investors and others are trying to calculate what it means for the global economy. The president-elect won with promises to protect American jobs, with increased trade barriers and curbs on immigration. Now, those are worrying policies for many US companies that rely on selling goods abroad. But the consequences extend further than the borders of the United States. To talk about this further, I'm joined by Linda Way, Fellow in Economics at Oxford University and Professor at the London Business School. Dr. Way, thank you for being with us. Donald Trump has said that he's going to put America first. Is that going to be to the detriment of the rest of the world?
Potentially. I think you can see it most evidently in terms of trade policy. So Donald Trump's policy essentially is to say any trade deal has to be good for America. But as we know, that can be quite a difficult criteria because it may be good for America as a whole to trade and to have broader trade links and open markets with other countries. But some workers within a nation like America will lose. And so if he applies that criteria, then it does make it quite challenging to see how he would expand, say, existing trade agreements. And it looks as if he isn't going to pursue some of President Obama's trade agreements, including the Trans-Pacific Partnership that would link Asia with America. And his plan at the moment is also to roll back and reconsider NAFTA. That's the free trade agreement that links America with Canada and Mexico. So applying America first, I think, is going to make any future trade liberalization with America a rather testy and difficult proposition.
In terms of America's trading partners, you've written many books on the Chinese economy, for example. How do you think China is going to be watching and playing this out as we learn more about what Donald Trump plans to do?
Well, within a day of his victory, Trump had already obviously indicated on the campaign trail he will not support President Obama's major free trade initiatives. So there's the TPP with Asia. There's also the TTIP with Europe. So China immediately, the day after the election victory, announced that they're going to start a Beijing-led free trade area of the Asia-Pacific. And right now, China is in Peru over the weekend. So these few days, the Chinese president is getting countries which had previously signed up to TPP, which is American-led and excludes China, to look at the free trade area they're proposing that they will lead. And Peru, which is where this massive trade summit is being held, has already asked to join the China-led free trade area of the Asia-Pacific.
And that sort of shift towards China could end up being quite damaging for America.
Yeah, and I think that was how President Obama had sold TPP, his Trans-Pacific Partnership. It was part of his Asia pivot, moving America's foreign policy away from Europe and the Middle East and towards the fast-growing markets in Asia, which is actually where the majority of American manufactured goods go to. And his argument was, if America is not in the Pacific, not in Asia, not in the Pacific Rim, then China will take that ground and set the terms. It's already quietly, for instance, become the biggest trading partner for Latin America. We always think of Latin America as being in the United States' backyard, but actually 2% of GDP worth of exports go from Latin America to China, and China is their biggest trading partner, not the United States. What's been happening quietly in the past is now just becoming more explicit.
Are there other markets out there, emerging markets perhaps, that really will be very worried about what Donald Trump does in his first 100 days in office?
Well, I think the country that's probably the most worried in many ways is Mexico. And I'm not referring to the wall, which apparently isn't going to be a physical wall. Mexico depends a great deal on selling into the United States market. And Trump wants to renegotiate the terms of NAFTA. And if he can't do that within the first 200 days, he's thinking about pulling out. And that would have massive dislocations for a country like Mexico, which only recently joined the ranks of upper middle income countries and relies on the US market. But I would take Mexico as the tip of the iceberg. if Donald Trump really does pull America out of existing trade agreements, most of the countries in the world rely on America as their biggest consumer market. Most of the currencies around the world are pegged to the US dollar. So America turning inward would have huge implications for the growth of emerging economies, not just in Latin America, certainly in Asia, certainly in Africa and further afield.
Okay, Dr. Linda Way, Fellow in Economics at Oxford University. Thank you very much for joining us from London. Now, next, more than a week after the election, the markets are still digesting Donald Trump's victory. Stock markets initially dropped, then recovered on hopes of pro-business policies from the new president. The dollar also hit its highest level in 11 months. After the initial shock, investors are now trying to make decisions without knowing which pre-election pledges Donald Trump will carry out. There are some trends already emerging, though. Kate Moody has been looking at the details. Kate.
Stephen, Donald Trump's victory ushered in a new period of uncertainty on the markets, which sent investors to safe havens like gold. Prices spiked sharply just after Election Day, but then scaled back. In the long term, the precious metal will likely keep its safe shine. Prices are up 15% for the year, and the president-elect himself has even praised gold as a good investment. Perhaps less solid is the bond market. In the first week after the election, investors sold $1.5 trillion worth of bonds. The Trump administration's plans for infrastructure spending and tax cuts could lead to higher inflation, which in turn damages the return or yield that investors get on bonds. Inflation will also impact whether the Federal Reserve raises interest rates. Higher interest rates mean higher yields. On the currency markets, the Mexican peso became a barometer for Trump's success, plummeting to historic lows in the days after his election. His trade policies are likely to be damaging for America's southern neighbor. Analysts say specific companies like China's e-commerce giant Alibaba could also suffer from protectionist policies and a threatened tariff on Chinese imports. Silicon Valley giants like Apple have been singled out. Trump has called for it to shift production from Asia to the U.S., but it could benefit if he carries out a promise to reduce the corporate tax rate. Likewise, America's biggest bank by loans, Wells Fargo, would get a boost if he loosens regulations on the financial industry. The U.S. steel company is also one to watch. Trump has pledged to bring strength back to the industry, and it could serve as a bellwether of his commitment and ability to take action once he's in the White House. Stephen?
Kate, thank you very much for that. To India next, where consumers and business people are still reeling from a government decision to pull 84% of banknotes from circulation. Narendra Modi announced the recall of all 500 and 1,000 rupee notes in an effort to cut down on money laundering and counterfeiting. But economists have warned of lasting damage to the economy. Anka Ula reports.
India's street markets teem with energy from Mumbai to New Delhi. Selling everything from colorful fabrics to fruits and vegetables, these street vendors owe their livelihood to cash transactions. So Prime Minister Narendra Modi's decision to pull all 500 and 1,000 rupee notes from circulation has many of them concerned for their futures.
Business has gone down a lot. After the withdrawal of the 500 and 1,000 rupee notes, a new 2,000 rupee note has been introduced. But how can we give our customers 1,900 rupees in change? 100 rupee notes have become so scarce. Even if people have money, they're unable to buy anything.
The government says the demonetization will crack down on corruption by making it harder to forge bills and evade taxes through cash hoarding. But the short-term consequences could prove dangerous. The shadow economy in India accounts for more than 20% of GDP, with cash making up 12%. The former chief economist of the World Bank called demonetization a very risky correction of money supply. In an interview with the Financial Times, he said that ordinary people with legitimate cash incomes and savings would suffer most.
They will not be able to change all their money for fear of harassment and not being able to explain how they got it. This can be very disruptive, increasing the costs of small business and trade and causing a drop in aggregate demand in the economy, thereby slowing growth.
As frustrated Indians wait hours in line to trade in their defunct bills, Modi has asked them to give him until December 30th to get the economy back on track.
It's been a difficult few years for Tunisia's economy and its key industry of tourism. Visitor numbers collapsed after 2 attacks last year targeted destinations popular with tourists. The government is lobbying European authorities to lift remaining travel restrictions. At the same time, Tunisia's wine industry is trying to attract more interest from visitors in the hope of boosting exports. Josh Vardy explains.
The last days of the harvest at the nefarious vineyard. Winemaking culture in Tunisia dates back more than 3,000 years. The industry underwent a revival in the 1990s, following a slow decline after Tunisia's independence in the 1950s.
In Tunisia, we have no lack of sunlight. And here our climate is good for grapes, which are dark and very rich in sugar. This produces very good wines that have the right percentage of alcohol and with a good aging process.
Tunisia produces around 32 million bottles every year, a fraction of France's roughly 8 billion, but it's mostly for the domestic market. Producers are now looking overseas.
We used to present different wines to tourists and to the international market. Today we're trying to work on this. We want to present the same wines for export that we do to tourists, so that tourism also helps to advertise Tunisian wine.
Tunisian tourism has suffered since the country's 2011 revolution and subsequent terrorist attacks. Authorities hope wine could become a new attraction for tourists. The sector is now worth around 80 million euros, and exports could bring an extra boost to Tunisia's struggling economy.
That's it for this People in Profit. If you have any thoughts on the stories that we've been covering, get in touch on Facebook at France 24 Business, or you can tweet me at NewsStephen. Until next time, thanks for watching.